Good morning, everyone, and thank you for choosing Market Briefing analysis of today's financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Financial news, June 5, 2023. European stocks and U.S. equity futures declined as weak services industry data from China raised concerns about the global economy. The Stoxx Europe 600 index fell by approximately 0.5%, with miners leading the retreat due to worries about decreased minerals demand from China. Casino Guichard Perrichon SA also suffered, with shares plummeting as much as 42% as investors assessed competing offers to rescue the troubled French grocer. Contracts on the S&P 500 and Nasdaq 100 also dipped, suggesting that U.S. stocks may open lower after the Independence Day holiday. This evidence of slowing economic growth worldwide has dampened demand for equities, following a strong rally in the first half, primarily driven by mega-cap tech stocks. Central banks such as the Federal Reserve and European Central Bank are still pursuing tightening policies, which are putting brakes on economic growth. Fabiana Fedeli, Chief Investment Officer for Equities and Multi-Assets at M&G plc, expressed that while it is too early to predict the depth of the upcoming recession, a slowdown is inevitable. However, Fedeli believes it is not yet time to abandon risk assets and emphasizes the importance of maintaining a focus on quality. With the anticipation of further interest rate hikes by the Federal Reserve and the European Central Bank in July, an aggregate gauge of borrowing costs, calculated by Bloomberg Economics, indicates an expected peak of 6.25% for this quarter, up from the 6% projected 3 months ago. Traders are closely watching the minutes of the Fed's last policy meeting, where officials paused their rate hike cycle after 10 consecutive moves but still predicted 2 additional increases this year. The dollar strengthened slightly, while the yield on 2-year treasuries, which is sensitive to policy changes, dipped about 3 basis points to 4.91% as U.S. bond trading resumed. In Europe, bonds gained, with Germany's 10-year yield declining 3 basis points to 2.42%. Chinese equities experienced initial losses, which deepened further, and the offshore yuan reversed its earlier gains after the Caixin China Services Purchasing Managers Index fell short of expectations. This decline in the yuan is notable, considering that the central bank had previously expressed its support for the currency in its daily fix. The weaker-than-expected data has brought attention back to slowing growth momentum and increased geopolitical concerns in China, according to Charu Shanana, a market strategist at Saxo Capital Markets. As a result of fading optimism about the Chinese outlook, investors have lowered their expectations for gains in Asian equities for the rest of the year. A Bloomberg survey of 17 strategists and fund managers suggests that MSCI Incorporated's Asia-Pacific Index may only rise about 5% by the end of the year from its closing level on Tuesday. In other news, oil prices retreated after rallying due to OPEC+ supply cuts by Saudi Arabia and Russia. Traders are awaiting critical commentary from the Saudi energy minister. Gold remained relatively stable. This week, key events include the OPEC International Seminar in Vienna, where OPEC+ oil ministers will be speaking, the release of the minutes from the Federal Open Market Committee's June policy meeting, and speeches by New York Fed President John Williams and ECB President Christine Lagarde, among others. Slowing growth in China's service sector raises concerns about the country's post-COVID economic recovery. The Caixin Purchasing Managers Index, PMI, for services in China dropped to 53.9 in June, down from May's 57.1, representing the weakest level since January and falling below the median forecast of 56.2. While a reading above 50 indicates expansion, a number below suggests contraction. The service sector, which has been a crucial driver of China's K-shaped recovery, is losing momentum as consumers reduce spending on services like travel and dining out. High youth unemployment and gloomy income prospects have contributed to this decline in consumer spending. These latest data are expected to spur calls for government stimulus measures to support growth. The figures may prompt the government to announce additional support measures as the Communist Party's Politburo convenes this month to discuss the economy. However, experts predict that stimulus efforts this year will be moderate due to concerns about the impact of further interest rate cuts on the yuan and tensions faced by cash-strapped local governments. Before we continue with our analysis, we'd like to remind you of your support for our channel Market Briefing analysis of today's financial news. If you're enjoying this video and find our content useful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and bring you even more quality content. Now, let's get back to the financial market news and the latest updates. In response to the data release, mainland China and Hong Kong stock indices extended losses, with the Hang Seng China Enterprises Index sliding by as much as 1.7%. Moreover, the offshore yuan erased its morning gains, declining by 0.2%. While business activity and new orders continue to grow, the pace of growth slowed down compared to May, indicating a demand slowdown. Export activity showed solid growth but at its weakest level since January. Cost pressures remained relatively contained, with input cost inflation below the series trend and production expenses increasing only slightly. Despite the more subdued activity growth, businesses increased staffing levels at the fastest pace in 3 months, supported by a more positive outlook for the coming year. Overall business confidence rose for the first time in 5 months. Spending on domestic travel during the recent Dragon Boat Festival holidays was below pre-pandemic levels, and data on home sales and auto sales in June showed declines compared to previous years. The average trip expenditure was approximately 16% lower than in 2019, indicating weaker spending intentions or lower purchasing power. Following the central bank's interest rate cut in June, economists have raised their expectations for further monetary and fiscal stimulus. State media has also published articles highlighting potential support avenues in recent weeks. In addition to the challenges faced by the service sector, the manufacturing sector, the lower leg of the K-shaped recovery, contracted for the third consecutive month in June. The Official Purchasing Managers' Index, PMI, for manufacturing recorded a reading of 49, indicating contraction. Concerns persist regarding the demand for factory goods and the lack of improvement in industrial deflation. The health of the service sector is particularly worrisome as it is one of the primary employers of young people. Employment in the non-manufacturing sector dropped in June, further exacerbating the record-high youth unemployment rate. However, the non-manufacturing index, which measures activity in construction and services, remained above the 50 mark, indicating expansion. Some of the main moves in markets today. Stocks. The Stoxx Europe 600 fell 0.5% as of 9:26 a.m. London time. S&P 500 futures fell 0.2%. Nasdaq 100 futures fell 0.3%. Futures on the Dow Jones Industrial Average fell 0.2%. The MSCI Asia Pacific Index fell 0.5%. The MSCI Emerging Markets Index fell 0.7%. Currencies. The Bloomberg Dollar Spot Index rose 0.1%. The euro was little changed at $1.0878. The Japanese yen was little changed at 144.38 per dollar. The offshore yuan fell 0.4% to 7.2548 per dollar. The British pound was little changed at $1.2701. Cryptocurrencies. Bitcoin fell 0.3% to $30,727.69. Ether fell 0.7% to $1,928.83. Bonds. The yield on 10-year treasuries was little changed at 3.85%. Germany's 10-year yield declined 3 basis points to 2.43%. Britain's 10-year yield was little changed at 4.42%. Commodities. Brent crude fell 1.1% to $75.39 a barrel. Spot gold was little changed. In conclusion, we'd like to thank you for watching Market Briefing analysis of today's financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.